Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Okay, next please. How can I help you, young man?
We want to go all in on IMRX. We have dartboard with biotechs, and that's what we hit. How can that go wrong?
Well, that's fantastic. A really smart decision, young man. We can put that checked and it's gone.
Welcome everybody. Happy Saturday. Redneck Johnny's here. How you doing, man?
Hello. Yeah, I'm doing good. What do you think about this biotech stuff?
Oh, I really think that's basically how I would do biotechs. Is I would attempt to just pick like a ridiculous amount of them, and I'd probably short them first off because I think it's like 8 out of 10 fail or 9 out of 10 fail, and then I would just try and hope that the one that actually succeeds doesn't murder my portfolio.
Yeah. And we checked this up, right? And it's down like 30% on what's come across as pretty good news, right?
Yeah, from what I saw, is it sounded like they had decent results from their testing. But I mean, it's only phase 1, so I don't know. I don't know. You would think, yeah, from what I read, it wasn't bad news, so you wouldn't think it would be as down as much as it came on the news. But whatever, that's biotech for you. I guess expectations were higher.
Yeah.
So.
Yeah, who knows? But no, I've talked about it before. There's a reason I have tried to filter them out in the daily movers because there's a lot of them there, and we have done a few of them before in the intro video, and yeah, it goes up and down a lot there in that industry.
They're always ripe for the picking, that's for sure.
Yeah. So maybe we should buy a dartboard, Dayne, and we can start to do it that way. And by the way, did you see the Fisker in our intro video? It bounced back a little bit.
Yeah, but still, when you're down like still 60% or whatever the heck it is. But we are calling. We're calling shorts. I'll tell you that. So all our intro videos, like almost every one of them has died. So I would say that we're doing pretty good on our calls for what's going to die. We should be shorting. Maybe we should switch over.
Yeah, we might look into that in the future.
Just picking the garbage as it starts to die. That's all we're really doing here.
Yeah.
This is updated. This is the current portfolio mix. So I just wanted to finally get this updated because it's a manual process, which I know kind of stinks, but like there's no way to really connect it. I use Fidelity, so there's no way to like I can get an Excel like printout of my portfolio, but I can't just like directly update it to my Excel, which kind of stinks. I guess I could, because I guess I could make a macro that pulls it automatically. but you still have to, no matter what, download the Excel file every time. So I just don't always do it, but this is updated. So you can see my BNED positions grown quite a bit, especially while we're down here at what I would consider the bottom. I think everything's kind of baked in now in terms of like how ugly this is. So, when I say ugly, I'm just saying like what the market perceives in terms of the fact that like if this doesn't work out, there's either going to be, I'm not even that worried about share dilution. It's more just bankruptcy. I still stand. I don't know if you guys have followed up on our comments that we've had. I've been commenting on Seeking Alpha, and I just don't think it would be worthwhile to go bankrupt for this kind of company. They don't have real assets. I mean, they have some textbooks. I don't know how many millions you think you would get from reselling textbooks to like the rest of the market, but it's really the contracts with the schools. And it's what was the other thing I was going to say? Like operating leases and stuff. That's like what their assets are. So if you go into bankruptcy, you're not going to get anything for that. You know what I mean? So I just don't think it makes sense for the lenders, if they can avoid it, to go into bankruptcy. You're not going to recover a lot of your money, which makes no sense to me. And the other thing too, I think it was BLCM brought this up on Seeking, is he was saying that if you go into bankruptcy, like if you had those contracts with the schools, let's say you said that you would run the bookstore for 2 or 3 years, they could technically cause litigation against you because you said you would run it for so long. So if you failed to do that, you would lose money by doing that essentially, because people could sue you. So it just makes sense in my mind that you would avoid bankruptcy at all, in any way possible, because if you do go bankrupt, not only that, but even if you think the business is going to come out of bankruptcy, you're going to ruin all those contracts with the colleges possibly. It just makes the future seem like I don't know. It would just be, it doesn't make any sense to me why you go bankrupt as this company. Do you agree with me?
Yeah, I totally agree, and I guess that was the thesis before we got the news about the potential share dilution and all that, And I talked a little bit about it on Thursday, and I know you did the same on Tuesday as well. That it wasn't like a big surprise that this was happening, because we knew they had to do something at some point, and I think we need to see how this goes now. But it's good to it's good that it's like it has started to they have started to deal with it, and of course our thinking has all the time, if they can survive this, this will be worth it. And Dayne shows his position there. It's my second largest position, and for me, I have a lot in it. So we are still we still have a belief that this will work out in the end. And I think it's I don't think it will go bankrupt either, no. And because of the points you were raising here, and I mean, if they just have a little bit of patience, they have proven that they generate cash, so they can start to pay off that debt and handle it in a better way.
Yeah, I would think if I was a lender and I could avoid bankruptcy right now by extending their credit amendments, I would give them like another year or two to prove the FDC model, and that would also get you through the Department of Education to see how that works out. Yeah. That way, going into the future, you can at least see if there's something still worth it here. If not, it's going to end how it's going to end anyways. But and I still, we've already said that I'm still bullish basically in the opt-in model, for reasons of making sure that you can actually manage to hit what the Department of Education has now written, saying that FDC-like programs would be basically mandatory. And the reason why I say FDC-like programs would basically be mandatory is because 2 reasons. Number one, you have to be able to provide the books within so many days. And another person brought up in the comments that, let's say you go to a big school with 50,000 students. You think the school is going to be able to, within the 7th pay period, be able to provide all these things constantly for 50,000 students? Because this is the thing, is if it's an opt-in model you have to assume all 50,000 students may opt in. So in that case, you have to have those textbooks ready. You can't assume no one's going to opt in. So you would basically have to purchase 50,000 textbooks, and then maybe only, let's say, 50% of people actually opted in, then have to get rid of half of them. But you have to have them by the 7th day pay period. So just to stay in or to stay within regulations, you'd have to have those books available for the students, and that's how they writ it or have written it. So to me, it doesn't make any sense that you would think that the opt-in model would get rid of FDC programs. And that's why I said I think the extension here between the DOE not coming to consensus and allowing FDC to continue to grow. I mean, imagine over the next year, Johnny, we see another 50% increase in revenues from FDC. You're going to watch this thing become net earnings positive within the next year. You know, this is a company that's going on the verge of bankruptcy that might be, you know, basically shooting out a lot of cash soon.
Yeah, and in the of course they're not going to have a call now, but they have released the report. And for everyone who is not up to date on BNED, you can go and check out the comments under the Courage and Conviction article, and there's a lot of links and stuff there. Everything you need from both sides now is there, right? Because after the potential dilution news, there was a lot of people who shorted the stock as well that jumped in and commented. So we have discussion from both sides now. So that's a quick way to get updated here, I think. But no, I agree. If they can just postpone this for a year, and I mean, in that report that they released, they showed that it has grown already, you know, and it's continuing to grow. And there's a lot of room for growth still, right?
Yeah, I mean, I think we're at like 200 some schools, and potentially they have 1,200 stores.
Yeah.
You know, so there's a huge amount of the market to still capture under this program and under these this new FDC structure. So yeah, I think there's a lot of room to run, and like I said, even in an opt-in model, you know, because one thing I said is, imagine you're an institution and you have to try and provide those books within that 7-day pay period. Like, it's not going to be worth it for you. You're going to lose money because you're going to have to buy all these textbooks that possibly might get used, possibly not. And you have to sell them at a discount. It has to be at a discount to whatever the market price is. So would you rather do that on your own as an institution, or would you rather do that with another company that's going to do this for 1,000 different schools? They're going to be able to provide you that discount and make sure that those textbooks and stuff are done. Like, I would definitely hire a third party to come in and run that for me. I'm not going to try and do that as an institution. It's almost impossible in the way it's written right now for a single institution to do that on their own. They would have to have a program like FDC or some similar program.
That point was also raised in one of those meetings, like the processes behind it, just on a purely what do you say, on a practical level of how to make all these systems work and everything like that. He was basically saying it will be a nightmare if we don't have the opt-out model that allows us to order in bulk and everything like that. But so the universities and the people who are for it has raised that point already. And even with our opt-in model, it's going to be even more important to still have that in place, I think, instead of trying to do it yourself. It will be impossible. Yeah,
I agree. So yeah, at this point, if you guys aren't following BNED as closely as Johnny and I are, the April 3rd date is the first, like, where technically they're supposed to have the credit amendment finished by, with an extension possibly up to April 10th. So the good news is even though we're at bottom quite, like, right now, we have less than a month for them to make the decision and let us know what's going to happen. So it's kind of it seems like the last leg of this waiting period. I mean, since we've been in, and since the whole Department of Education thing came out, we've been following it very closely. And now I think we're at the final place here. And then the other interesting thing too that someone brought up. So if you read the 10Q, it says that the way they accrue their money from the different schools, that might not actually show up in this 10Q. It would actually show up in the fourth quarter 10Q, which is typically one of their weaker 10Qs, just because, or weaker quarters, I should just say, because it's not when they're selling a ton of textbooks. But if they're still receiving a bunch of revenue at that point, that actually might bump that quarter up and make it a bit better than what most people are expecting. So we could actually get a little bit of a bump on that quarter too, and then go into the fall, which is one of the biggest quarters. So I think it's exciting in both aspects, essentially. So
yeah. But of course, we have said all the time, risky, small market cap. Usually we don't deal in these, like this is on the lower end for me, at least. Dayne, would you agree?
Yeah, this is, I mean, if I probably wouldn't get into something unless it's already like a story that I really knew what was going on. And, you know, I think this is just priced in to fail, but at the same time, I think this is priced wrongly. So, it being down where it is right now doesn't really worry me. But that's, you know, if I could see why people looking at it right now might not touch it. But that's also where you don't get the huge returns if this is right. Because if this is right, we could see this go right back up to, I mean, it was up to, what was it, up to $2?
Yeah,
So
over
you can
$2.
see this bounce right back to $2 if we're correct.
And keep in mind that I know I refer back to it a lot, but for me it shows a little bit of the potential that we also see here. That one Friday where there was 8 million in volume, it ended the day just only up 7%, but it was above 50 for a while there. So it took off a little bit on that day alone, you know.
Yeah, in the stock, I think last time I checked, there's only like 2% of the flow is short. But if there's not anybody shorting it actively at the time that all of a sudden good news comes out, I think this one would pick up pretty quick. I think you'd watch some really crazy volume flood back into this because everyone knows the model looks successful. It's just, can we get through this credit amendment right now? So we'll see. I'll be interested to see what they do in the actual amendment. If there is a dilution, how much it is. I'm actually at this point really, I guess the rest of my cash that I'm saving right now is kind of if there's a rights offering or something like that. But either way, I'm still happy with the position. I'm happy it's my largest position. I am not, nothing's changed in my mind. But as always, you know, we always recommend do your own due diligence. You know, we're not recommending it as a buy. I just think at this price, I mean, it's trending around. I actually got some buys in yesterday below 60 cents. So
that's good. And we have the disclaimer and everything, you know, and for me personally, this is money I can afford to lose. I think that's the way you should go about it, and the risk is just worth it for me. I just have to say though, Dayne, I saw below the article from Courage and Conviction, I saw some of the new people that came in after the big drop now. That was a bit bearish on the stock. I'm not going to say that they put out some wrong information, but it seems to me like they were not just fully updated on everything and had misinterpreted a few things in their comments. And I saw that people also told them about it, like that they maybe have read a wrong filing and stuff like that. So if you're new to BNED right now, I think it's worth taking the time to actually read through everything there and try to figure out and put the pieces together, like always, of course. But I just want to point out that if you only read the comments there, you can be you can miss a few things, I think, right now.
Like most stocks, there's a lot going on underneath the hood, and it's kind of up to you to dig in and how much you want to find out with things. But man, I just looked over. Cocoa's up 10% again.
Again?
That's what I should be. I should just be commodity investing in cocoa. Look at this. Hold on, it pulled up in the wrong spot. It always does this. Drives me crazy.
Yeah, I see in my sheet I have the wrong ETF there. I need to update my ETFs.
Look at this ridiculousness.
Beautiful chart.
Buy chocolate.
Yeah.
I'm gonna start selling candy bars on the end of my driveway.
You know, it's Easter time.
True.
Yeah.
The bunny's been busy.
I also saw in my dashboard that like Mariana is a bit up.
What was it?
Mariana.
Oh yeah.
Weed.
Well, you know, weed and chocolate goes hand in hand.
Yeah.
Is it not pulling this up? What do you have as your is this not an ETF anymore?
Mine is named ETF MG, Alternative Harvest ETF.
You know what the actual? It must be this
I guess
MJUS. This MJUS is definitely what it is.
Yeah.
Yeah, but it's bouncing all over. It's not like, you know, when I see
Up and
Coco's
down.
chart and it's just, I mean, you know, this looks almost the opposite. Don't get me
Yeah.
wrong, there's some buys in here, but yeah, Bitcoin pulled back a little bit. Rigs up a little bit. Shipping, oil's up, continues to kind
Been
of
some
climb a bit.
recent insider buys in rig as well.
Yeah, they're the two big owners of it. They purchased again. I feel like every year they purchase like a few million. It's crazy how much they spend.
Yeah.
But yeah, you know, rig. I got in rig at like 2 something, so it's just tough for me to justify getting in around 6.
Yeah.
I mean, who knows? Maybe we'll continue to see it climb. My big thing was rig was that, you know, they were turning that company around and they were doing a good job, and now I think it's been kind of priced in a little bit.
Yeah.
We still have a lot of debt.
Have you seen copper? Copper is a little bit on a perhaps a breakout.
Yeah, true. Actually, it's a 5-year chart. Copper's looking good. I know copper. I mean, copper's getting used in all this electrical equipment now, so that it's just going to keep becoming an important mineral.
Yeah, I saw on Twitter there's some talks about it already, and also I saw on Twitter or X. I don't remember who said something, but he was like, I just feel like in like 2 years' time, 1.5, 2 years, we will regret that we didn't buy more gold and silver companies because he could see the potential there right now, and they have showed up a few times in the daily movers in the past month or two, you know.
Yeah. Yeah, another one that keeps interesting me is just uranium. I mean, even Amazon now is talking about possibly using some kind of nuclear power to help power some of their stuff. So that's an interesting mix of things to get into.
Yeah.
You know, I feel like as we continue on here, you know, just expanding some of the things that we invest in, you know, because as we've always said, the whole point of this portfolio is, you know, to take on riskier assets. And, you know, I think some of them, while they might be in the risk category, I think there's some serious upside to some of these things. And that's kind of what we're looking for. So we'll see. Actually, I didn't even notice, did Adtherent, I've been selling out of Adtherent for like a little bit now, but I didn't know what their last earnings report said, because they're down quite a bit.
Yeah, that I didn't notice that, but how much is that?
For
How much
it's
is it
up
down?
and down actually on the day. Still bull. I mean, still looks great.
Yeah.
Yeah, well, it's a bit of a pullback. It had quite a jump here actually the past few days.
And you have trimmed that one, right?
Yeah, that I've been trimming. Just because I wasn't too sure how much benefit they would get. They're one of the ones that they were going to benefit from the fact that Google keeps continuing to restrict, the amount of cookies and stuff that they're going to use for people, and it's going to open up other web advertising solutions, which that's what AdTheorent does. So, I was going off when they started to change things. The stock turned around. I thought it was super cheap the first time I looked at it, anyways. And then with that news coming out, that's when I took some positions, and that was a big position for me at one point. That was up 50. That was up. I don't even know what my cost basis is, but I'm whatever I have left, it's still up like 100%. So it's been more than a double.
Yeah.
But I don't have too much left in AdTheorent now. But you want to start to move on to some of the companies?
Yeah, I have a few pulled up here, but which ones do you want to start with?
Well, in mine, I'm still behind on my actual fundamental list. This is stuff from earlier in the week. So I have my list of tickers over here if you want to pull up any of these ones in the background here to go through. And then I still have to update my spreadsheets for what happened on Friday. So I have it all in there to be updated. I just have to update it. So I figured we could go through some of these and some of the names that you had mentioned, and then we'll take it from there.
I think no, that sounds like a good idea. I just was it Jared that commented on your stream on Tuesday about the BuzzFeed? Maybe we can spend a little bit of time on that today.
Yeah, BuzzFeed. I know I put it on deck. I can't remember if I put it to my watch list, but thanks, Jared, for the tip. I have looked at BuzzFeed in the past, but I hadn't looked all that recently. I saw that they had an asset sale, but I didn't take the time to look into it. So when you pointed it out, I actually took the time to look in. I think it looks good. I think they're in a good position. I think it was a smart sale. I can't believe they got $100 million for Complex, but they have other assets and stuff to sell. So if they're able to get anything else off and kind of keep improving their debt position, they're in a good spot. I mean, they were on the verge of bankruptcy, and now they're fine. Their debt covenants got much lighter after they got rid of the term loan. Here, while I'm sitting here talking about it, we can pull it up here too.
Yeah.
But
no, 'cause they were talking. They had more assets that they were talking about selling, right?
Yeah, because they own. If you guys can see here, they own brands BuzzFeed, HuffPost, First We Feast, including the hot ones, Tasty. So they have a bunch of different things. It's just to see, I'm assuming they'd have to wait for the right buyer to come in and give them the right price,
Yeah.
But so, and the other thing, though, that I was thinking more long-term is, well, yes, this does position the balance sheet to a much better position, because if you look currently how it looks, these numbers aren't updated for the Complex sale. It doesn't look great. It looks kind of rough. I mean, it's not that old. But, where this is telling me I have to heavily dilute, I wouldn't have to. This would totally change these numbers. So, right now, mine's saying we're 32 cents a share, so we're above that still. So that's part of the reason I haven't taken a position yet, is it just looks a little pricey to me. But I have to do a little bit more research, because my question is, as they sell off these assets, yes, it puts them in a better spot, but in the long term, how is the business doing, and what are revenues and earnings going to be going forward? Because as of now, even on a EBITDA basis, they're negative. Now, I don't know. I got to do the math and figure out how much that'll change without having to have as much debt, as the interest payments and stuff come down. Maybe that'll open up a lot more wiggle room and liquidity for the company and better position them. So we'll see going forward. I know, but by getting rid of that term loan, I think they had to hold on to like 20 million or so in cash for that term loan. That was part of the covenants. So that opens a lot of cash for them to do other things with. So we'll see there. I'm just trying to think if I took a look at owners yet. Did you look at the owners for this one?
Yeah, I did, but I do not remember. I don't remember what I found here.
So Comcast owns a huge position. Some of these big owners though are dropping shares, so that's interesting. I wonder. See, I wonder when they're dropping those shares from. You know, is that post this sale, and now that the stock price is up, you know, they're all starting to trim? Because that makes me wonder, you know, if there's a chance of an asset sale in the near future. These guys don't seem real bullish on that idea, because another asset sale, you would think would materially put them in an even better spot, you know, get them out of debt basically. But then, you know, that, like I said, then what is the company continuing to do? How much are they going to generate?
Yeah. And keep in mind, I don't know if you mentioned it, Dayne, but it's already up 100% since beginning of February.
Yes. So it got down to obviously bankruptcy territory down here. And management did the right thing. You know, management saw that, hey, we can't get out of this without a big asset sale. So I'm sure they went to their strategic alternatives, you know, started saying like, hey, we need to get out of this position. Is there anybody interested in any of our assets? And someone must have said that they wanted Complex. So, you know, smart move by management. Well done.
Yeah.
I mean, the volume here is pretty wild. You know, I mean, we're talking something that, you know, trades, well, you know, not even like 9 million, you know, maybe just shy of a few, you know, million shares, and it got up to 90 million shares. So, I mean, that's a lot of movement.
Yeah.
But yeah, at the moment, I don't have much else to add to BuzzFeed. You know, it looks like because of the spot they're in now, that you really shouldn't have to worry about too much liquidity issues. So I don't think they'd be diluting shareholders further from here. But this would be a good one to read all the transcripts and also the 10Qs and see what, like, next, I want to see what they have to say in their next earnings report and see where they think the company is going now that they're in this better position.
Yeah. And you talked about the sale earlier. There's even sale from the founder, you know, and it's a pretty big one too. So
yeah, I mean,
definitely
don't get me wrong,
something
they own a ton of shares.
Yeah.
So, you know, them, like someone here selling 500,000 shares, you know, that's nothing. It's nothing.
No.
I mean, he owns almost 5 million shares. So selling 500,000. So, I mean, this is a million. That's pretty good. That's pretty big.
That Jonah guy.
Almost half. Or no, is this, wait, no, this is change in share. Okay, so these are the shares. So these are small.
Yeah.
You know,
But
500,000. This guy owns, no, sorry, I'm looking at market value. That's 20 million
Yeah.
shares he owns, and he only sold 500,000. So it could just be them finally taking some profit, you know, because of the stock's price go up. So
Yeah.
it really, to me, these are pretty small in the grand scheme of things.
Yeah.
This is probably them, you know, patting themselves on the back after what they did.
Yeah.
All right. Yeah, I don't think I have anything else to add right now for BuzzFeed, though. I mean, if anyone's in the comments and they got anything, I don't know if anybody else is following it. Sorry, let me scroll down here, too. I'm hoping, you know, people, if they were looking at any of these numbers. Well, actually, I guess I got the screen off to the side enough. It doesn't really matter. I'm blocking my charts here, but who cares? No one needs to really see those. All right, we can go through some of the tickers you had pulled up. APT was first, is that correct?
Yeah, I have them here.
All right, so they're a Poland-based company active in the switchgear and metering equipment industry. One of my personal favorites, by the way. Company's products are divided into both the switchgear and surge protective device for mining equipment, all kinds of meters, a lot of metering things. And the IT side of that, you know, I know nowadays they kind of just drive around and it just kind of gets the information as they do.
Then I think maybe that's the wrong one.
Not the one
It's
that you
supposed
got?
to be Alpha Pro Tech.
Oh, of course, mine's not working here. I can update it real quick.
Yeah.
Hang on here.
Your number seems to be right though.
This is what you had, Alpha Pro Tech?
Yeah.
Yeah, I don't know why. I'm in America. I don't know why I would ever not default to the New York Stock Exchange. We went to the Warsaw Stock Exchange.
Went to Poland.
Right to Poland.
Yeah.
But why it does that, I don't know. It doesn't make any sense to me why they would do that. Let me just refresh this so it's the real data from Alpha Pro.
Yeah.
Sorry, my dog's going nuts over there. Finally getting some nice weather, and I got people walking past the house, so my dog goes nuts. All right, here. There, that looks more reasonable.
Yeah.
All right, forget everything I just said. We're going to start over. This is a Canadian-based company now, which is engaged in developing, manufacturing, marketing a line of protective apparel garments, face masks, face shields, and line of construction weatherization building products for the housing market. What is going on here? Face shields?
You need face shields.
I mean, you got to protect your face, right?
Yeah.
So building supply and disposable protective apparel is it like stuff for like in the hospital? Face masks, face shields. Okay, serves markets for biotech, pharmaceuticals. Okay, so apparently they're part of the business is in housing, weathering type, products, and the other half is for like personal protective equipment in laboratory and or like healthcare settings. So it looks like they're buying shares back quite a bit. They trade almost under book value.
Yeah, I have much the same as you on that. And they come up as safe in my sheet.
Yeah, their earnings are pretty good. I mean, they're a little bit down. Obviously, I wonder if there's just a big pullback that's almost overdone, because if you see how well they did with COVID, COVID, they killed it, obviously, because this is right up their alley. But to be honest, even way post that, they're still in good shape. It looks like some of their metrics are down now, but it makes sense. They don't have quite the same sales that they used to have, but at the same time, like they're still generating good cash from operations. They still are generating earnings,
and they have cash. But if you look at the chart, it's trading a bit high at the moment. It's almost like 10% from the 52-week high, which is. But maybe a reason to wait for a pullback or something.
Yeah, but just on a chart base, I don't really care necessarily. I mean, this is a net positive working cash.
Mm-hmm.
They have really low debt, plenty of cash. They're buying shares back. They're not paying a dividend though, right? I don't think I saw one.
Oh, I didn't see any dividend.
No, so they stick to share buybacks,
Yeah.
which is fine. It raises the value. I don't know how the tax structure works in Canada for dividends. I'm sure it's probably similar to the States, but I don't know that for sure.
I see that the insider owns are about 10%. I didn't see any owners on Whale Wisdom that I pay attention to. And there's also been no insider buys in quite some time.
All right, so it looks like
But
they just had their earnings. Revenue's up 25% year to year. Their building supply segment sales increased by 3.5 million, or 55%. Oh, okay. This is quarterly. I thought they were saying year over year. I was like, wow. Well, even
Oh, yeah.
I mean, don't get me wrong. That's still good quarter to quarter, but
Good, no?
okay. So it looks like they're pivoting the business now. Their building supply segment is growing pretty quickly. Their disposable protective apparel's down, which makes sense. Like we said, obviously the need for all the face masks and stuff is pulled back, but we got to figure out how well the side of the business is doing for building. So I think that's why the people are starting to price this in. Is that the housing market could be worse, just because it's so expensive right now. Maybe the housing the whole housing industry is slowing down. So maybe that's what people are anticipating.
Yeah, I have. We have seen like the home builder section is up for a few months after New Year's. I was just checking the owners. There's this girl Donna Miller that owns 10%, so she's the biggest owner from all of them.
Honestly, even the home builders chart, it still is bullish. I mean, this is not
Yeah.
slowed down at all. So it's not like we don't still need homes, or people building them for that matter.
And there wasn't too many people talking about them.
Yeah, right. All right, so he kind of talks about the same stuff that I basically said. Donna Miller, is that who you're talking about?
Yeah, she owns more than 10.
So it does look like the building supply is down a little bit. On an annual basis. It was up on a quarterly basis, though. It looks like inventories are kind of stabilizing right now, so that's good. But this is before the most recent quarter, actually, so it's tough to say actually if that has anything to do with that quarter that I was just looking at for the earnings here, because this is obviously from before that. So
And did you also see the retained earnings? It's pretty high compared to the share price.
I mean, yeah, and that's why I said they're pumping that right back into the buybacks. So
Buybacks, yeah. Revenue is a bit down though. But like you said, it seems to stabilize a bit after 2020, after pandemic.
yeah, I like the idea of this business. I would definitely wait for a bigger pullback here, but it looks like it's just kind of a slow mover here.
Yeah.
You know, and in case there's any kind of future outbreak or something like that, you know, they would obviously have the protective type apparel. I mean, that business could boom again for them. So good thing knowing forward that that's just one random catalyst for this business. Because that's something I like to do as I learn more about some of these businesses is just once I hear something like that, like in the back of my head next time, if I was ever to hear there was another outbreak or something, like APT would pop up in my head and be like, that's a company that's going to benefit from this. You know what I mean?
Yeah. Yeah.
All right, let's go to the database. I'm going to just start putting some notes on them.
Yeah. I think I will add them to my tracker.
All right, so I'm going to say good narrative. Even though I know the housing market and the other thing are kind of slowing down, but it's got good fundamentals. I think good management, has low debt. It's a little too expensive for me here. I'm gonna put them on deck because I think that's good, and I'm pretty confident with my thesis here. I'm gonna say around a 4 in terms of my confidence in this idea. Now, obviously, so like you guys would probably see that, you know, I just assigned a 4 to this and be like, wow, it's really high for looking at it for 10 minutes. But when I put that there, what I'm basically saying to myself is just in my basic understanding of it, it's at a 4. That just means an on deck situation. It means like I'm like it looks to me with the numbers and stuff that this isn't super tough to figure out what's going on here. You know, I need a pullback, so that's more when I'll start to dig in heavy on this and really assess how confident I am in it. But for now, I'm saying, hey, just based on that quick idea that I have about the company, that's about a 4.
Yeah.
What do you get for mine says I get around just above book value is I get like 538 currently for what it's worth.
Yeah, I was more like when it gets interesting for me, it's like around 3 maybe.
Yeah, I mean, if I wanted my return, yeah, like in the upper 3s, I get it's interesting for me.
Yeah.
All right, well, that was interesting. I'm glad you made me realize it's not a Polish company.
Yeah.
Selling
Yeah.
meters. It's a big difference.
Let me check here.
Oh, actually, I want to add in there's 2. There's what's her name is the owner, or is a major owner, so good to know.
I am missing some insider buys though. You know, in a company like this, that would be huge if you get a big one.
Well, sometimes I just want to be careful with that too, because sometimes the Canadian companies, they don't pop up on Open Insider for insider buys.
Even if you can pull them up, you don't see them there.
I saw some sales there. So
no, I mean sometimes when it's Canadian, I don't get anything in Open Insider, but on this one you have something. Can they still miss something?
I'm not sure. I just to me, I would normally check elsewise. But it is Alpha Pro Tech. That was the other thing. I was just checking real quick to make sure it's the same company, because sometimes they do stuff like that.
Yeah.
All right. What was the other ones? We can keep going through some of the tickers you had, because I think yours is the more updated stuff. I'll go through some of these other companies too. If we don't get to them today, I'm saying. But like I said, this is from the past week, so I like to go through the stuff that's more recent, just because that way it's as up to date as possible for the stream.
Yeah. I just saw that the GENK, I have went through them a little bit on a past stream, but when I pull them up now, my numbers are messed up because for some reason I get 0 in share count. But I think they have had a little bit of a interesting development the last week, so maybe we can go to that one.
Yeah, this is the one. Remember when I first saw it after looking at this was the one company from Burry's filings that I thought was interesting.
Yeah, he has it around the bottom of his portfolio, so it's not one of the big positions there, but it definitely stood out to us, you know, after you told me about it.
Yeah, well,
it looked interesting.
You know, the more as I get into valuing some of these companies that are a little trickier, like this is such a new company, what you can do to value something like this without a lot of numbers here is you can at least value it by comparing to other companies. Like, how are other companies doing in that field, you know, comparatively to how this one did in their early years. And I think we were comparing it to Kava. And if you compare it to Kava, it looked really good. So that's one of the things that interested me right away, because even without a lot of numbers to go on, I could at least see this going on. I know Korean barbecue type restaurants in America are doing extremely well. It's a really fast growing food, like, you know, industry. So I was interested in this. I know there's a few that have kind of popped up around where I live. And the food's great. It's kind of a fun atmosphere, and I can kind of see it becoming like a staple. So this one was interesting to me, and I see Burry buy. So, you know, I assume he's probably thinking along similar lines to what we are.
Yeah, and I saw also, if I remember correctly, the management in one of their filings were talking about the growth plan they had, and it was pretty aggressive, but realistic in my opinion. So definitely this is in my tracker and something I follow, but it has gone up a lot in the last week, 30% or something like that. Yeah. And there has been a lot of insider buys. And I also saw, I don't know if you follow, is it Copy on Twitter?
Oh, I'm not sure.
You know, you can go and check the 13D filings in fintel.io. And if you go there now, his fund is named Praetorian PR. And he has a holding there.
What is it under
here? Let me check. KHUPPY. No, sorry. His profile is like KHUPPY.
Yeah, I'm not sure which one it is.
Oh no, sorry. If you write KUPPY without the H.
This one?
No, sorry, I'm doing it wrong for you. If you type in HKUPPY. Yeah, that one.
This first one?
It's a red cap on his profile picture. I think you had it. I'm just watching the stream, so I'm a bit behind.
Yeah, no,
that
you're
guy.
Good, you're good. I just realized, but okay, interesting.
Yeah.
Capital. Make volatility great again. Nice.
So he's in it.
All right. All right. Good to notice, I guess. Take note of.
Yeah.
I'm not sure exactly what kind of investor he is, if he's really... So let's see. This is from March 6th. So EPS miss of a cent. Oh, of -1 misses by 5 cents. So people were thinking this was going to be positive and they didn't quite make it. But the revenue was a 10% year-over-year beat. So that's big. I want to look at their most recent filing then.
Yeah.
So I mean, a lot of cash. Inventories are way down, so they're working on that. They have deferred taxes of 12 million. That's good. That's a lot of money to be able to use.
Yeah.
So they don't actually have any real debt. They have a lot in operating leases. But no, they have a line of credit, but they're not using it. Okay. All right, so they're in a good position. I mean, then they're sitting on a bunch of cash.
Yeah, and they are talking about growing the stuff, you know, so it's a possibility that they will be successful in that.
So they really don't have any debt.
And I saw the article on Seeking Alpha. He was talking about like influencer marketing and stuff like that. I don't know. Have you? Is this something that pops up on your? Have you seen anything like about these restaurants or?
I haven't, but what I would be interested is just to look at a webpage and look at them.
Yeah.
I mean, this is what I picture when I picture Korean barbecue. You know what I mean?
Yeah.
looks delicious. Looks
Delicious,
like nice places.
Yeah.
Where is there? I think I just saw before I clicked there. I wanted to see if they had a recent presentation. This is from November. Is anyone in the comments? I don't know if anybody in the comments has been here. I'd be curious to see. Get out of here. All right, so looks like the management teams dealt with restaurants, a lot of them. There's one in New York City, so I got one that I could actually go and try.
Yeah. You should.
You know, my sister lives in San Diego. Maybe I should text her and see if she's ever been here.
Yeah.
So it looks like pretty good growth, though.
Yeah, exactly. And I think, according to Whale Wisdom, Burry's average is like, let me check it.
It's too bad I didn't pull this up when it had that huge price pullback, because that's right where it
Yeah, it
got
went
real
to
interesting down here at
560.
6.
Yeah. According to Whale Wisdom, Burry has the average of 964.
Yeah, so he was a little early to enter, but he might be
I
looking
had
more at a
had
long game, and I'm
opportunity.
sure he averaged down if he's still in it.
Exactly. Yeah. That's what I was going to say. Like, and I saw it in my tracker at 5.5, and I was like, but you know, I've talked about this before. Right now, it's a bit. I don't have cash free to just put into stuff, so I'm a bit locked. But definitely something I noticed that it dropped all the way below 6.
Yeah, I have it's worth 742 right now, just on my
Yeah.
rough calculations. So, and granted, there's not a lot of data to go off of, so I don't know how much I trust that number really. But just even if you're looking at like this is one thing too. Like, you know, people are saying like, how do you use technical analysis as a fundamental investor? Well, when I don't have much fundamentals, I'll use technical analysis because like I don't have much to go off of. You have to use what you have. So this is a good period of time to see what the market thinks things are worth. And like I said, you compare it to other restaurants that were in similar situations at the time. So
And I mean, did you pull up the Open Insider here? Because there was a lot of purchases at $6.
yeah, for some reason this just all happened.
Yeah.
Yeah, because these guys are smart. These
Yeah.
are smart purchases. Good for these guys.
Yeah.
This is good
Exactly.
times to add to your position.
It adds up to like 3 million in total.
Yeah, I mean, normally this isn't really my thing because it's so young, but at the same time too, this is pretty interesting, and the fact that they only have operating leases.
Yeah.
I get it. Earnings were negative, but they're just negative. I mean, we're talking a penny a share is the negative, and just look at the rate it's growing.
Yeah.
I mean,
And I mean, I completely agree with the lack of data and stuff like that. I usually I need way more, but this has a lot of other things. It has Bury involved. It dropped. If you trust the Whale Wisdom numbers, it dropped way below his average. And then you get insider buys on top of that, and this copy guy as well. It would be worth just throwing in a little bit, you know, just based on that.
right. And they're saying you can kind of put these anywhere. It's not, you know, it doesn't necessarily matter. See, I will say in my area, there's now, I think, 3 Korean barbecues. So there is competition for this. It's not like these, I don't know how many public companies there are, but the one by me that's like the big one is like Mosu or Misu. And that place is pretty big. I mean, it makes really good money, and it was packed when I was there. So, I mean, it's obviously something people like. And the food was good. Don't get me wrong. Like, food's great. So,
Dayne, I
they're
see we have
saying-
we have X Station in the comments. He's saying we have a couple of those Korean barbecue by me. They are subpar. I won't go there. So that's valuable information, actually.
Okay, yeah, thank you, X Station, because so X Station, it makes me wonder. So, do you have other Korean barbecues by you that are like much better? You know, and is it like the price isn't worth it? Is it just the quality of the food? Because those are things that I would want to know.
Yeah. And nice to see you back, X Station. Thanks for tuning in.
Because the other thing too is like, you know, if this isn't like a real high-end Korean barbecue and the quality of the food's a little bit less, that doesn't mean that like that's not okay. Like, you know, if X Station really, like, you know, I'm a foodie. I like to go and spend a little bit more and get the better quality food. But there's a lot of people who would rather save the money, and they'd be happily able to go to one of these places and not spend quite as much, you know. So it might just be that there's... Yeah, he's just saying there's a lot of better places. So good to know. Yeah. So the quality might not be necessarily as high.
No. Well, good information to have. So thanks for that.
Yeah, thanks. Thanks, X Station.
That's okay. We have just started with this stream and stuff, but that's awesome, right? We get some information.
It's super helpful. That's why I said if anyone's in the comments, let me know, because I'm curious to how people like this.
Yeah.
Because, you know, they're talking, you know, potential for 250 plus restaurants, and they have 35 units only. So, what was revenue here?
180. You mean last quarter?
Yeah, I just wanted to see. Or where was that? Was that back here? Revenue of 45 million. So let's just multiply that by. So we got 35, and they said 250 stores. 250 divided by 35. So that would mean it could grow by about 7 times, they think. So 45 times 7 would be 315 million in EBITDA, and or in revenue, not EBITDA. I don't think I said EBITDA there. Where the heck is this? And then what was the? Sorry, I'm trying to find this. What was the difference in earnings? So net income has went slightly down. Makes me want to look through these and try and figure out what they can do to get those earnings up, because operating expenses were a little bit higher. Because it does look like then they're not generating a ton of cash flow with the current business model. It looks like they're just kind of scooting by.
Yeah.
There was some stock-based compensation, so we could cut that out. You know, they are purchasing property and equipment and stuff, so that's like more, that might be more one-off. You know, once they start to get to size. So yeah, I would think it would generate earnings. I just want to see what they have for earnings on a quarterly basis here. So net income, it's kind of been all over the place, to be honest. Okay. So it's tough to say when they're this young.
I just noticed, Dane, that the guy copy I told you about, he's just below 10% here as an owner. He has a bigger position than Burry.
How many shares they have? 32 million shares, and he's a 10% owner, so he owns like 3 million shares at $8. That's a lot. That's a pretty sizable investment.
Yeah.
All right. You got anything else that you wanted to add to this one? I think that gives me a good idea of what I was thinking here.
No, and we have covered it a little bit before. I'm just a bit. It's annoying to me that because if I had a little bit free cash, I think I would throw some in there at just to be in it, you know. There's a lot of things that I like on this one. But for some reason, I don't know what happened, but my numbers are all messed up here, and I couldn't even access the quarterly filing now, so I don't know what's going on.
Yeah, for me, if I could get this under $5, that would start to interest me, based on my current numbers. Yeah. So I'll stick with that for now.
Yeah.
All right, we can keep moving on.
You want to do SSRM? SSRM?
All right, so while this is pulling up, it's an intermediate gold company for producing assets located in the U.S., Turkey, Canada, and Argentina. It's a global pipeline of development and exploration assets. They produce more than 700,000 gold equivalent ounces annually. It's pretty good, actually.
Yeah.
Company's growth and development pipeline includes just blah, blah, blah. A bunch of different places. They're all doing that kind of thing. They own a lot of land, too, which is a possible asset.
And just take a quick look at the chart. I think they had some trouble in Turkey with some landslide or something like that they had to... I think they end up having to pay for it themselves. And I think that's the huge drop there.
Sorry, I'm just closing some of this stuff here. Yeah, seriously, this is kind of crazy because I have this as pretty undervalued.
Yeah, same.
Yeah, because my value is saying this could be valued at like 20 some bucks. So $4.
Yeah.
Oh, was this that giant land? This was the giant mine collapse. I saw a video of this, I think.
Yeah, there was a collapse, so maybe.
Yikes. Well, that makes
And they
this
might be
immediately
in trouble
interesting,
for
though.
it. Yeah, this is maybe an opportunity, you know, but they also might be in serious trouble because of that. I don't know. I didn't look too much into it.
Well, they're talking 34 comments on this one, so they said a lot of people died. That looked pretty terrible.
Yeah. And I think management had to leave and everything like that.
Thabo says, I don't see any substantive analysis putting a hold on it. Okay, blah, blah, blah. Yes, obviously. I didn't get to read the article, so but
I see
Stavos is usually pretty quick to
Stavos
call
is
out
there.
if he doesn't think you're actually doing anything in your article. You're just reprinting news, essentially.
Yeah.
Yeah, he said they own 3 other producing mines, so we'd have to figure out how much this hurts litigation wise, and the loss and everything on this side. I don't want to downplay anybody who lost their lives during this, so
No.
it's pretty terrible to see an accident like this.
Yeah. So you saw that on the news?
I saw on something on social media a huge collapse of a mine, and it doesn't really do it justice because it just shows like a giant landslide from the side, but people were in there.
Yeah, I just read that there was a landslide, so I didn't know the full consequences of it. But it seems to struggle a bit then.
Yeah, and there's going to have to be a cleanup from the mine, which they're saying could be 200 million cleanup.
What do you think moving forward? Maybe there's a chance they will also cut the dividend now then.
I didn't even see what's the dividend at?
I get like 30 cents.
Yeah, same, but that's well, now it's actually a substantial dividend when you compare it to what the price of the stock is.
Yeah.
So how much do they have in cash?
They have
they have 597
500.
in debt. They said it would be a $200 million cleanup, which would leave them at 278. So I'd want to see when that's due, and I want to see how much does that affect revenue, losing that mine. Do they break it down and tell you what each mine makes? Like how much of this business was this here? There's going to be some serious impairment charges here, that's for sure.
Yeah, they have it on operating segments on notes to financial statements.
Did they comment on this though? I mean, they must have put out something more recent than this. This last 8K, whatever this is saying.
And I assume the mine is like I don't know how to pronounce this, but the Koppler from that seems Turkish. 114 in revenue million.
Yeah, I saw that. It's this. It's not what I was hoping this would say. I was looking for information on this. No, all this is just not going to help me. Can I? Did you look at the news or anything on this? Does it say more about what's going on here?
I'm reading now that it's just like they definitely have to pay for everything themselves.
Yeah, I get that. I just wonder. It's SSR's second largest producing gold mine, operating since 2010.
They have suspended the dividend and a stock buyback plan. Because I also noticed they have bought back some shares in the last years.
So their second largest mine. I want to look at their most recent presentation and figure out what that kind of numbers mean. So a big chunk of their mineral reserve was Turkey. It was over half of what they had.
Yeah, it looks like I mean, it's down a lot, you know.
This is broken but down. So this is Koppler is what's gone, right? Koppler.
Yeah.
Yeah, so if you subtract out over their earnings that they anticipated, what is this? This is equivalent gold production, so they're going to lose, it looks like about a third to half of their gold production because of this. Okay.
Yep. I saw someone commenting that, but that's only speculations. But he was saying that he think the mine will be functional again by the end of the year.
That seems a little. That seems a little soon. I don't know about that. By the end of the
No.
year, after a complete collapse.
And I'm also not sure if they are going to be allowed to continue there
Yeah,
at
I would
all.
wonder what the litigation and what them saying in terms of.
Because I just read also that
I still think this looks cheap though.
I do agree.
This price looks. This price seems crazy to me.
Yeah.
Although I can't believe it was trading down to $10 before the news.
The chart looks a bit
This doesn't
ugly
even
over
down
time.
here seem cheap to you?
Yeah, it does. But what's the recent news before the collapse? Oh, there's some guidance, sell guidance, or I mean, like ratings from analysts before.
I should have just read the Seeking article, Alpha article that tells me everything I just went searching for. he quickly in one paragraph answers all those questions I was just trying to figure out. I should have just kept reading, but
Nice. Messy Q3 results, so that's why it's down before. That was in November. Have you checked the owners?
no. Although with that kind of sell-off, I imagine it's a mix of owners and retail alike. That's a lot of sales here. No one really had it as a massive starting position for themselves.
No.
I mean, there's definitely some ownership, but BlackRock and everybody that you expect that owns everything.
Yeah, the normal ones.
Yeah, this guy puts up this picture, and he said this is, I don't know where exactly this one's from, but he said that they were growing out of Copler, so it's not as big of a deal.
All right.
Yeah, good old hot dog 22 says that obviously there's still some upside risk here, but and obviously I wouldn't throw the farm at this, but I don't know. This looks interesting to me. I might even, to be honest, take a position here.
Yeah. No, I agree. It's you have a little bit of a bad quarter before, and then an accident that makes it drop even further on already a little bit of a what seems to be like a cheap price, and they do have cash there, to survive through this.
Yeah, these guys were bringing up apparently with the collapse, there could have been stuff released into the water system there, but it looks like so far there's been no contamination that they've seen, so that's good.
Yeah. And on the RSI, it's like way oversold. But it has kept dropping though after that big drop.
Yeah, but that's, if you're a long-term shareholder and it continues to kind of sell, like, if you own this before, it sucks. Now is, I mean, don't get me wrong, they have a long, probably, road to recovery just in damages.
Yeah.
Taylor Dart had written about this just before on February 9th. I mean, I would be surprised because I'm reading Taylor's thing here, and he said it's a generational asset in Copler, which looks like it could potentially mine in the 2050s. So I think they're going to do everything they can to get that back up and running if they can. I mean, obviously it's going to be a lot more costly just in the fact that they're going to make sure it's safe.
Yeah. But also something to just have in the back of the head that there's also new management then.
Yeah, I just saw, that's what I was reading in one of the things that they had changed. That's quite the company to take over. Could you imagine that right after all this?
Yeah. And I assume like you will not see insider buys on news like this in a company. That would be very unethical, I guess.
True. Yeah, it definitely looks kind of ugly as any kind of management to buy after all this happened. Oh, so they did have earnings transcript. Is that what's going on here? Yeah, they do have their earnings transcript. So this is gonna be a big one to read.
Yeah.
That's from March 1st. All right. Well, this is definitely interesting. It's definitely ugly, but
Yeah.
we're trending on a bottom here for sure. Poor narrative. Where to even begin with talking about this? On deck,
Yeah, I'm writing some notes myself now.
commodity, cyclical. It's gonna need a turnaround. It has a lot of assets. I'm gonna give this a 3 in the current state. Fallout from mine collapse. Let me see where. Yeah, I would get, just from a quick rough calculation based on what's changed, I would get 736 as fair value.
Yeah. And it's definitely interesting already at these levels then, to me also.
Yeah, I mean, I get... Now, granted, there's going to be a lot that's going to go on here, but I get just shy of $5 is a decent enter.
Yeah.
All right. Well, I mean, this one's definitely interesting for me. Like I said, I'll have to read that transcript. I won't do it on here, so I try not to. It's kind of just tediously boring to read through transcripts.
Yeah.
I mean, I find them
No,
interesting
but
and they're
good.
exciting usually, you know, if I find something good. But just to read to people on here, anybody can read the transcript.
Yeah.
All right. Is there anything else you wanted to add to this one?
No, I think we have. I need to. I am adding it to the tracker now, and then my plan is to, like you, read a bit more on just like what they say and what they expect now in 2024, and the development of everything that has happened.
Yeah, because at this point too, you know, you have to recalculate out that there's no dividends, and probably also it sounded like they had a share buyback program that might not be happening. Maybe they talk about that in the transcript. I'm not 100% sure, but
No, they have halted they have stopped their plans to buy back.
yeah. So we'll just kind of have to see what's going on here and what they think they can do going forward.
Yeah.
Do you want to pull up the next one here?
The last one I have for today on my side is AAN.
Yeah, I've looked at them before. It's been a minute.
Yeah. So it's furnitures and stuff.
Yeah, and more like lease to own on that side of things.
Okay. They've been buying back a little bit of shares since the pandemic,
They have
but
some
also
insider buys.
the debt is, huh?
I said they have some good insider buying too.
Yeah, but they've taken on some debt the last 2 years. What do you get for operating cash flow on a 7-year average?
I get about $4 a share.
Yeah, same, which is pretty good.
It's surprisingly good based on what the share price is here. They have a lot of debt,
Yeah.
so it's the debt that's the concern here.
Yeah, and it's a bit annoying. In my data set, I get they pay a dividend almost all the years since 2005, except in the pandemic. So they seems to like gonna continue with the dividend.
Yeah, I only get till 2019 for my data. You go back further, right?
Yeah, I have since 2005. But yeah, no, I have a little bit longer. Yeah.
Yeah, that's I don't know why my data is only going to there.
There hasn't been a merger or something.
Yeah, I'm not sure. Something must have happened between 18 and 19.
Yeah, I see. There's a drastic reduction in the share count from 18 to 19. So I assume there's been.
Yeah, because I get even if you go on like Seeking,
Yeah.
their data only goes back to when mine does.
Yeah.
Yeah, so what I mean, if they're leased to own, that's probably not actual debt. Like, you know, it's listed as debt, but it's probably not in the traditional sense. So they have a lot of leased merchandise. A lot of operating leases. They do have about 200 in actual debt.
Yeah. Which is still a lot for them.
Yeah, I mean they got 60 million in cash.
And the debt is due in 27, it seems like.
All right, yeah, I was gonna say it looks like they have some revolver type loans and stuff.
Yeah, that's a small one.
Okay.
I'm not too worried about that. Do you have revenue pretty like a good increase from 22 to 23? And even before that?
Yeah, I mean I have that they're up pretty good right now.
Yeah.
Gross margins down a little bit.
And if you go to the chart, you can maybe look at a double bottom here, you know?
Yeah, the interesting thing though is why is their earnings so poor?
Yeah.
Like in 2020 they had 2020 is COVID, so we don't need to worry about that.
No.
Then their recovery in 21, and then they have just a little bit of earnings the past 2 years.
Yeah. That's not so good. They had a. Do you have a big acquisition in 22?
Yeah, I do.
Yeah. So that's why they took on the debt, probably.
Yeah, well, hopefully that pans out more than it looks like it is so far.
Yeah. Yeah. It doesn't look too impressive, but I mean, but it does have a few things going for it, though.
Yeah. that's not what I wanted. I just wanted to read what someone who's actually looked at this a little bit more than.
He has a buy rating.
With a price of 10, he says.
Have you been to this shop?
What's up?
Have you been to this shop before?
Yeah, I've heard of Aaron's. I don't really rent things, so it's not really for
No.
me. But
Yeah.
But I mean, some of these companies, I was in cons for a while.
Yeah.
Some of these different structured businesses tend to do pretty well. There's a lot of Americans lease stuff. They don't want to buy it. They lease it and own it for so long or whatever they want to do it for.
Yeah.
And the whole lease to own thing, it's not really the best idea in the long run, but some people want to have stuff now, so they'll pay up for it and just to be able to get it earlier and then pay it off as time goes.
Yeah, and maybe now with the times that we have gone through, that has been a bit popular, maybe. He's talking about the acquisition there too, 230 million.
Yeah. He gives a forward EBITDA multiple of 6.5, which he says below the median sector of 9. He takes the debt out and then divides that by the share count to get his $10 a share, which is fine.
Yeah.
I'd say it's a little tougher to compare it since this is lease to own. I'd want to know how much they have to do in their amortization write-offs. So they have a bloated inventory, so I wonder how much those assets are actually worth. You know what I mean?
Yeah. And what do you have for a free cash flow?
On a 7-year average, which honestly I can't really use because I don't have that long. I actually on a 3-year average, I got like $1.63 per share.
Okay.
Yeah, so my valuation calculator doesn't work well on this one.
No.
Let me just do some simple math here real quick and figure out where we're at. Where's my calculator here?
I think we've found some interesting companies today.
Yeah, no, you had some good ones to bring up.
Yeah. And anyone watching, let us know what you think if you see something that we have missed or that we have thought wrong about, in your opinion, something like that. Let us know in the chat or in comments.
Sorry, I'm just doing some calculations here real quick.
Wait, you have to do calculations for investing?
Sometimes, yeah.
Oh, I should buy a calculator then.
I'm not doing it on paper. So I'm just trying to pick what kind of numbers I want to use for this, just because it's lease to own, and I want to kind of heavily discount these assets because I don't think the book value is really representative of what this is actually worth.
No, the book value seems way too high.
At a quick calculation, I get like 850. That wasn't that quick. I shouldn't say. That took me a while, but I get to like 850.
Quick enough.
I already have these guys in my thing, right? Yeah, AAN. Okay. Yeah, I had these rated way higher before.
Yeah, but they were also trading way like. What do you think when you see an insider purchasing a few years back at a much higher price and then you don't see them averaging down? What do you think about that?
Well, I don't think they're always going to average down. A lot of these guys own shares, so like for them, they're in the company. You get stock based compensation, so they're holding a ton of shares just based on that. So
Yeah,
they buy when they think it's cheap, and I mean, regardless of whether they're right or not.
I
These
just
guys are
saw.
looking at the long game, anyways, of owning something like this.
Yeah, I just saw some purchases in 21 where they were buying at. That's probably when they.
Some of these purchases, I know they're a little high now, but I don't think in the $7 or $8 range. I mean, it was not a bad price to buy around, even though it's down to just under 7 now.
No, I was checking the woman who bought 25, or if it's a man, I don't know. But anyways, doesn't matter too much. Yeah, I don't have. Do you want to go through some of your tickers?
Well, actually, I do gotta. Sorry, I do gotta get going though.
Yeah. All good.
But yeah, I mean, I still got all these. I don't know if you want to go through some of these just to see if anything. I mean, some of these I've already looked at. They were actually most of those I've looked at. I know almost all those companies. So
Yeah, I had to use a different screener today for a few of these because it wasn't so much on the daily and the weekly that we didn't cover in the week.
yeah. I mean, this Alliance Entertainment's one that I haven't looked at, but like Unified, Vintage Wine, Car Parts,
Yeah.
Origin, Big Lots, CommScope, like all those are companies I know. I think I something maybe pull them back up. So, I can probably keep going through some of those too. But yeah, no, I just gotta get going for the day.
Yeah, that's all good. I just pulled up the AENT, and in my sheet, you only get 2 years of data, so it's nothing to look at, I think.
Yeah, well, I mean, some of the what we looked at GenK today. They only had really 2 years. So
Is that the one you have up at yours?
yeah,
Oh yeah,
I mean,
you have a year
don't
more.
count these first two columns. They're not really full years. Sometimes Share Radar hands me data, but it's incomplete for. I think it's because sometimes when something IPOs, they try and give you a few years of information backwards.
Yeah,
But it's all incomplete. You really can't go on it, so it doesn't really mean much. So you can kind of
Yeah.
discount those.
yeah.
All right.
No,
Dan,
but
you got
good
anything else
stuff.
to add? Yeah, sorry, I do got to get going. I mean, I
Yeah.
would love to keep going, but
We can you go live on Tuesday this week, right?
correct. Yeah, I'll
As
be on
always.
Tuesday.
Yeah. So we will see you then, and I don't think. Do you have any hopes that we will hear some updates on BNED this coming week?
I'm not gonna rule it out. I would say that possibly we could see something on BNED.
Yeah.
I'm trying to put myself in the lender's shoes. If you were going to write a credit agreement, does it do any benefit to really press these things out? I mean, you obviously there's a lot of legal type stuff you have to go through just to get these things approved. So this is the thing. I think because the DOE's decision was coming down to the wire right when the 10Q was supposed to come out, I think that's what got delayed, because they wanted to see if there was a consensus and it went right to opt-in, whether they thought that was good or bad or not. I could see the lenders wanting to know what happened out of that outcome first. So
Yeah.
I think part of the reason stuff's pushed back is because until that decision was made, they couldn't really go to the lenders with an accurate depiction of what's going to happen to the business over the next year. So I think they're probably just going through everything they have to finalize the deal for the amendment, and then they're just going to put it out once that's ready, to get it out to the public. But we'll see. I mean, so yeah, I wouldn't necessarily not expect something next week, but I think the news is going to be kind of dry going forward up until, like, that's what we're all waiting on to hear.
Yeah.
We got to see what that amendment is. If the amendments in shareholders, or even the FD, even BNED, if it's positive towards BNED surviving, hugely bullish for the stock. If it's an equity dilution, I'm going to guess the market takes that somewhat negatively, but I still think in the long run it's going to be worth way more than it is today, which is why that's another big part of my thesis why I'm still in. The only thing I could think would be really tough would be bankruptcy, but I just don't see necessarily why you would bankrupt the company in the current spot. It seems like a really terrible time to bankrupt a company that's just starting to grow and's like really taking off. That seems like a bad time to do it. I would give them a little bit of run room, and if they're able to pull it off, then let it go. You're going to get paid back more as a lender.
Yeah.
So.
And in terms of ALTO, I don't expect too much this coming weeks, to be honest. I talked a long time about ALTO on Thursday.
Yeah, I think without some kind of, if there's any news obviously on an asset, that would be huge. And then the other thing is
the deal with Volt.
Yeah, that obviously, and then just watching crush margins, just seeing where those land for ALTO. And
I don't think you're going to see an asset sale before after the summer potentially, but it's just they started to talk about it in the call now for the first time, like pretty solid, and if they have shown anything, it's that they take a lot of time to do what they say, you know. Which
Yeah.
isn't bad necessarily. It's not bad, but it's bad if you have a short time horizon.
Right. And then just to go through some of my other positions, just because I haven't really went through some of these other ones to give you guys a quick idea. ARC, I repurchased. I got a smaller position before the earnings, and then earnings killed it, and I took a little bit, so my cost basis went up a little bit. But that's why that jumped up. It wasn't meant to be this large of a position, but the stock just grew so fast that I benefited greatly from it. And I just think the business is going to continue to do well. Jack, whether that continues to succeed, we'll have to see what other movies come out. You know, what brands they can take advantage of for that.
Yeah, we looked that up not too long ago, and there was a new movie coming out soon, wasn't it, from Disney?
Yeah, there was something coming out, and then there's like a bunch of remakes that they're doing and stuff from COVID, and I think there's another Sonic movie coming out eventually. So we'll see what those ones do. Yeah, I told I spoke ULH. To be honest, I bought into them on partly this huge insider buying. They just look somewhat cheap to me. That's why I didn't take a huge position with them. But I just think that's. They're an interesting spot. I think they're doing well, and I'm just going to kind of ride them for a little while and see. I probably won't really make much of a bigger position with those guys. And then Grand Tierra too. There was a bit of a pullback actually after what I thought was great earnings, so I started to take a position there, and that keeps riding up. So it looks good to me right
they've
now.
done well, and I saw. I talked about it on Thursday. I didn't manage to get time to pull them up, but the Ring Energy is also up a little bit. So those two are a few of the ones we have talked a lot about in the stream before, and they tend to be a bit similar, those two.
Yeah, I've been in and out of both.
Huh?
I said I've been in and out of both Re and
same.
GTE, so.
I prefer GTE at these times, but I was open about my decision there. I sold out of GT, which so far looks a bit stupid, but I put the money from there into BNED, so let's see how that works out in the end.
10 bagger, easy 10 bagger.
Yeah. Then it's not stupid, so it can change quickly.
Yeah, no, we'll see. Yeah, there's still stuff going on. We'll see what else can come of things. But yeah, I just wanted to round out the portfolio. I know I had kind of talked, and I know traditionally I was saying I wanted to take some bigger positions, but I think it's just for my sanity that I get in some of these other names that I like things about. What I think I'm going to change the portfolio slightly, because I don't want to leave a lot of cash just sitting on the table either. I think my goal will be to continue to take 1 or 2, maybe even 3 large positions if there's something like BNED that I really think is compelling. And then just kind of balance out the portfolio with other ideas that I think are really good, but just I think have limited downside. They're not quite my A ideas, but they're close. So I'm just going to keep filtering some of these other names in that I like.
Yeah.
But yeah, right now I think it's in good shape. Things have been doing well. I think some of the stuff is cheap.
Yeah.
And some of the names even that we mentioned today, I might start to take some smaller positions in some of these things too.
Yeah. I kind of liked a couple of the ones today, to be honest. And we're going to be, as always, transparent and update you guys on everything we do with the portfolio. We think that's very important for the credibility of the stream. And we are aware we need to deliver, and that's what we are trying to do. So hopefully we can prove that to ourselves first and foremost, but to everyone's watching as well. And maybe we can all learn a little bit on the way. That's the goal here.
Right. All right, man. Well, have a good rest of your weekend.
Same to you. Thanks for watching, everyone.
Have a good weekend.
Bye-bye.